Did you know that there are better ways to give to the charities that you support? Now, you may be somebody that writes a check, sends it to your church, or you go online and you enter a credit card to support charities that you want to support. And if that's the case, there are actually better ways that you could get more bang for your buck. One thing that you could do if you're 70 and a half or older is you can do what's called a qualified charitable distribution. This means that you have money taken from your IRA and sent directly to the charity. So it's payable to the church, it's payable to the charity, it's not a check payable to you. That eliminates the tax on that distribution. Now, if you take money out of your IRA, then you have to report that, pay tax on that, and that adds to your income for the year. But if you have that taken from your IRA and it's sent directly to your church or to the other charities that you support, then you don't pay income tax on that, and the charity doesn't pay income tax on that either. Now, you're able to do that up to a certain limit. 2026, that limit is about $115,000. So if you're wanting to do more than that, then you would need to supplement it with other giving. If you're not 70 and a half or older, but you own stocks that have significant gains in them, you can have the stock sent to the charity or sent to a donor advised fund to then be given to the charity, and you don't pay any capital gain tax on that gain, and neither does the charity or the donor advised fund. So it eliminates the tax on that gain. Now, there's no limit on how much you can do other than you only get to deduct up to 30% of your adjusted gross income. If you're giving cash, you can deduct up to 60% of adjusted gross income. But if you're giving a capital gain asset, then you can deduct up to 30% of your adjusted gross income. So you'd have to look at that. If you can't deduct the full amount, you can carry it over for up to 5 years. But the key is that by looking at the ways that you could give, you will be able to eliminate some taxes that you would have paid, still give the same amount to the church or charity, and then just replace those investments with the cash that you were going to use to give to the charity. So it becomes a complete win-win for everybody, and it helps you minimize your lifetime income taxes.